to continue with the discussion for income taxation of corporation, we have the non-resident foreign corporation, or NRFC. So the tax rate in general for non-resident foreign corporation is 30% on gross income. Remember that the income of non-resident foreign corporation must be those sourced from the Philippines. So only income within the Philippines will be subjected to corporate income tax for non-resident foreign corporation. Illustration. So a non-resident foreign corporation has the following data on its income and expenses for 2019. So my gross income in the Philippines is a USA. Also business expenses in the Philippines and in USA. My royalties and interest on time deposit within the Philippines. So to compute the taxable income and tax due, you get the taxable income directly from the gross income within the Philippines, or the 7 million. You directly multiply it by 30% tax rate. That gives you a tax due of 2,100,000 pesos. Remember that if the taxpayer is a non-resident foreign corporation, you no longer deduct business expenses within the Philippines. The taxable income will directly be the gross income within the Philippines, or in this case, 7 million. And also, royalties on Philippine copyrights and interest on time deposit PNB Manila, Philippines is not added in the computation of the taxable income because both of these are passive income which is subject to final tax. Engaged in trade or business. So business transaction must be continuous. So when you say a corporation is engaged in trade or business, it must be that their business transaction is continuous. Now let's proceed with the passive income for non-resident foreign corporation. So you have interest in foreign loans, which is 20% final tax. Intercorporate dividends received from domestic corporation. So remember that if the domestic, or if the taxpayer is a domestic corporation or a resident foreign corporation, whenever they receive dividends from a domestic corporation, such a dividend is exempt from taxes or from income tax. However, if the taxpayer is a non-resident foreign corporation, the dividend received from domestic corporation is subject to 15% with the condition that the domicile country of said NRFC allows a 15% tax credit due to NRFC taxes deemed paid in the Philippines. So what does it mean? Mag-qualify na 15% lang yung bayaran ni NRFC na tax sa dividend received from domestic corporation, provided daw na yung home country ni non-resident foreign corporation is nag-allow ng 15% tax credit for non-resident foreign corporations sa 15% tax credit sa 15% tax credit due to NRFC tax deemed paid in the Philippines. So, for example, my Philippine company or my Philippine corporation na nag-transact ng business sa home country ni NRFC if nag-allow daw si home country ni NRFC na bigyan ng 15% tax credit si Philippine corporation there in the home country of NRFC, then the domestic or the dividend from domestic corporation will only be subject to 15% final tax. Otherwise, dividends will be taxed at 30% regular corporate income tax. So if the domicile of the NRFC does not impose any tax on dividend received from foreign sources, preferential tax rate of 15% for intercorporate dividend will apply. So if si domicile country daw ni NRFC hindi nagta-tax ng dividend from foreign sources, then preferential tax rate of 15% on intercorporate dividend will apply. Capital gains, sale of shares of stock not traded in the local stock exchange. So, again, just like the resident foreign corporation, capital gains tax on sale of shares of stock not traded in the local stock exchange the tax will be 5% of net capital gain not over 100,000 plus 10% of net capital gains for over 100,000. And as a sale of real property in the Philippines held as capital asset will also be subject to 30%. So in this case, class, the 30% generally, yung sinasabi niya dito na real property is like condominium, okay? Kasi class, hindi pwede mag-own ng land yung foreigners in the Philippines. So they are not allowed to own lands in the Philippines. So basically, yung 30% is just, for example, residence, okay? And condominium, okay, based on the Condominium Act of the Philippines. However, dapat yung 60% ng condominium is owned by Filipinos. We have here special corporation or corporations, non-resident cinematographic film owner, lessor, or distributor. Dapat yung cinematographic film owner, lessor, or distributor is non-resident will be subject to 25% of their gross income from all sources within the Philippines. Non-resident owner or lessor of vessels chartered by PH nationals, 4.5% of gross rentals from leases to Filipino. So pag nagparenta daw class si non-resident ng ng vessel no chartered by PH national to Filipinos, then the gross rentals will be subject to 4.5% final tax. Non-resident owner or lessor of aircraft, machineries, and other equipments subject to 7.5% of gross rentals or fees. Now, for proprietary non-profit educational institution and hospital, again, to summarize, and as a recap, that's 10% of taxable income, provided that the ratio of income from unrelated activities does not exceed 50% of gross income. Otherwise, proprietary non-profit educational institution and hospitals will be subject to 30% regular corporate income tax. Resident international carriers subject to 2.5% of gross Philippine billings. So we have already discussed this one. The ROHQ or Regional Operating Headquarters, 10% of PH taxable income. For regional area headquarters, exempt sila because basically yung office nila dito sa Pilipinas or yung headquarter nila dito sa Pilipinas is for supervisory purposes, for communication purposes. Kaya they are exempt from paying income tax. See, RAHQ. Domestic and resident foreign depository banks. Ayan. We also have the offshore banking units. Now, improperly accumulated earnings tax. So this is another applicable tax type where the tax rate is 10% of the improperly accumulated taxable income. So what is an improperly accumulated taxable income? Earnings or profits accumulated beyond the reasonable needs of the business. So si government will impose the IAET or the improperly accumulated earnings tax whenever a corporation accumulates income beyond its reasonable needs. For example, yung reasonable needs lang, yung reasonable needs lang ng isang corporation is 10 million pero may profit siya na 15 million na hindi dineclare as dividends or dinistribute to partners or to stockholders, then he will be subject to, or the government will impose, improperly accumulated earnings tax because nag-retain siya ng profit or income beyond its reasonable needs. So, there is this what we call immediacy test for reasonable needs. So, reasonable needs means those immediate needs of the business including reasonably anticipated needs. So, reasonable is, for example, ito, accumulated earnings up to 100% of the paid up capital. Earnings reserved for expansion, improvement, and repairs approved by the Board of Directors. Earnings reserved for compliance with any loan obligation under a legitimate business agreement. Earning required by law to be retained and in case of subsidiaries of foreign corporations, undistributed earnings reserved for investment in the Philippines. So ito yung mga considered as reasonable needs. If nag-retain ng income si corporation ng amounts equal to this reasonable needs and nag-retain pa siya in addition ng income beyond these reasonable needs, then the income beyond these reasonable needs is subject to improperly accumulated earnings tax or IAET. Who are covered? All domestic corporations classified as closely held corporations. So closely held corporation are one where at least 50% of the outstanding capital stock or at least 50% of total voting shares is owned directly or indirectly by not more than 20 individuals. So, IAET, again, is applicable to domestic corporations which are classified as closely held corporations. It will not apply, again, IAET or the improperly accumulated earnings tax will not apply to publicly held corporations, bank and other non-bank financial intermediaries, insurance companies, enterprises registered with PESA, BCDA, or with other special economic zones, taxable partnerships, GPP or the General Professional Partnerships, and non-taxable joint ventures. Next is we have tax-exempt corporations and corporate returns. So the filing of quarterly and final or adjustment return, every corporation subject to tax shall render in duplicate a true and accurate quarterly return and final or adjustment return. So binabayaran yung tax ng corporation by quarter, but it is adjusted at the end of the taxable year. Non-resident foreign corporations, corporations not engaged in trade or business in the Philippines shall not be required to file income tax return. Kasi yung income ng non-resident foreign corporation is a final tax na na-withheld na ng source ng kanyang income. Who shall file the corporate return? Of course, the president or other principal officers, vice president, or the return shall be sworn to by above officer and by the treasurer or assistant treasurer. Corporate declaration and returns. Declaration of quarterly corporate income tax on a cumulative basis not later than 60 days from the close of each of the first 3 quarters. So, dapat mag-file ng declaration and returns si corporation every or within 60 days after each quarter. For example, in a calendar or taxable year from January, the first quarter is January, February, March. After the last day of March, within 60 days after the last day of March, the corporation is required to file for a tax declaration and return. The final adjustment return covers the total taxable income for the preceding calendar or fiscal year filed on or before 15th day of the 4th month following the close of the taxable year. So if the taxable year is the same as the calendar year, then the 15th day of the 4th month is April 15. So dito na yung pinafile na yung entire year or yung adjustment return. So, yung entire year na babayaran niya na tax minus the taxes paid for the first 3 quarters will now be the tax due and payable. Ayan, so we have here the rules no on if the sum of quarterly payments not equal to the total tax due for the year, of course, depende if the quarterly payments is more than the tax due for the year, then it is considered to be a tax credit or a tax carryover for the excess credit or be credited or refunded with the excess amount paid. Filing of the returns, the quarterly income tax declaration and the final adjustment shall be filed with the AAB or the authorized agent banks or sa RDO. So sa office talaga ng BIR or again sa authorized agent banks. Pwede rin sa collection agents or duly authorized treasurer of the city or municipality having jurisdiction over the location of the principal office of the corporation. Payment of the income tax. The income tax due shall be paid at the time the declaration or return is filed. So magkasabay sila upon filing the declaration and the return, income tax due shall also be paid. So, under Section 30 of Republic Act 8424 or the National Internal Revenue Code, here are the exemption from tax on corporations. So these following associations are are exempt from taxes on corporation. So we have a few. Note, however, that notwithstanding the provisions in the preceding paragraphs, the income of whatever kind and character of the foregoing organization from any of their properties, real or personal, or from any of their activities conducted for profit, regardless of the disposition made of such income, shall be subjected to corporate income tax. So, kahit na exempt ang mga to in paying income tax kung nagkaroon sila ng income from activities for profit, then such income for activities to earn profit is subject to corporate income tax. So, that ends the discussion for the taxation of corporation. You can also refer to the sources below to help you further understand the lesson. So there are sources in the internet and in our books to help you further understand the lesson. So that's it for this topic for YOLO C. I hope you learned something, and please don't forget to like this video and subscribe. Peace.